Ladies and gentlemen, welcome to the Business Brew. I am your host, Bill Brewster. This conversation features Ian Bezek. Ian joined me to talk about Colombian stocks. I am not going to continue a full-blown foreign stock kick, but between him and Meb, I guess I'm featuring what I'm thinking about. But I've interacted with Ian for a while on Twitter, and I've read what he's written for a while. And he pinged me and he said, man, even my followers think that my Colombian ideas are stupid, so I should come on and chat. And I have some deep value investor in me that can't say no to that kind of a pitch. So here he is, and I don't think his ideas are laughable. I think he's got an interesting set of ideas that he puts forward in this. And should you enjoy what you hear, I'll link the Seeking Alpha and his Substack in the show notes. This episode is sponsored by Daloopa. Daloopa is founded by a former hedge fund analyst. Daloopa is bringing simplicity into the investment process. Daloopa offers an AI-driven single source for all company reported data and allows for investment teams to make the most informed decisions in the shortest amount of time. Daloopa scales the velocity of an investment team's idea gen. Analysts spend less time locating and manually inputting meaningful disclosures into Excel and more time synthesizing in the minutes after the print. Daloopa captures data from all company reported sources, including from footnotes, MD&As, and investor presentations. Daloopa's data sheets include GAAP to non-GAAP adjustments, guidance, and all company-specific KPIs. Each data point is auditable to the source for easy verification and accuracy. Daloopa's Excel plugin can also update your existing models for the latest quarter in just a single click. Bulge-bracket banks and major multi-managers are trusting Daloopa for initiating coverage, building and maintaining industry dashboards, and keeping their models up to date. Visit daloopa.com/businessbrew to create a free account and learn more about how Daloopa can increase your team's speed to differentiated insight. My version of that pitch is, A, if you are at an institutional shop that is considering Daloopa or Analysts or a product like that, it would be a real solid to me to have you go to daloopa.com/businessbrew, sign up and check out what they do. I really like the product. I wouldn't be able to afford it on my own, but it's a perk of the pod. And I really like that I can click on a cell and go directly to the source and understand exactly what I'm looking at. I use it for company background research. I was just using it to look up YouTube TV and Hulu and how many subs they each have. And it's a really, really solid product, and it gets you exactly what you need. And then it's got the link to whatever presentation it's pulling from. So I find that to be very, very valuable. As always, none of this is investment advice. All of the information contained in this program is for entertainment purposes only. Please consult your financial advisor before making investment decisions and do your own due diligence. Enjoy the show. I am joined by Ian Bezek, and Ian and I have chatted ideas off and on. I have read his stuff on Seeking Alpha and whatnot. And we were talking a while ago about Colombia and emerging markets generally. And then you pinged me and you said, even people that like my ideas are making fun of my Colombian ideas right now. So I think now's the time to talk. And I said, all right, come on. So tell people a little bit about yourself and how you follow, what you follow, and why you do.
Yeah. So my background, just kind of out of university, I was writing on Seeking Alpha, like you said, and hedge fund, Qurate Capital, kind of saw some of my work and liked what I was doing. And so they invited me out to New York to work for them. I worked 3 years with Qurate, kind of an activist fund that kind of we published our research on stuff. That kind of gave me a good base for doing research. And then after 3 years there, I decided I didn't want to live in New York City forever. And so I moved to South America, kind of lived in Guatemala and then Colombia, met my wife in Colombia. And I've been down here for the last 8 years. And I've kind of fully immersed myself in the culture here and kind of looking for opportunities, investments, whatever, here in South America.
Why South America? Why did you choose that?
No, I think I wasn't real happy with the culture and kind of the way things were going in the US, and kind of wanted to get a different perspective on the world. And kind of being an economist by training, I figured the return on investment for learning Spanish was very high in terms of all the number of different countries and people that speak it compared to other languages.
Could have come down to Miami, but I say that half joking.
Well,
I was always disappointed.
Everyone's in Florida now since the pandemic, from what I've heard.
Well, I was always disappointed because I lived close to Miami growing up, and I would take Spanish class, and then I would not go down and practice, and now I don't know any of it, and the only way to learn languages is through immersion, from what I'm told. So shame on me for not taking advantage of a resource while I was down here, but oh well, child things. Not that I'm going down now, but anyway. So how did you find the transition? Like, you started in Guatemala?
Yeah, Guatemala is known for having great Spanish schools because the majority of people in Guatemala speak Mayan as their first language. And so they speak Spanish as their second language, which means they speak slowly and with no idioms or kind of slang. And so it's a very good place for foreigners to learn, just because it's a very neutral accent.
Ah, that's neat, man. So wait, where are you from?
I'm from New York City.
Okay, so you were sitting there and you say, Self, I don't like the way of life here and where culture's going, and you literally picked Guatemala because you could learn Spanish there and move there.
Yeah, I just figured that I'd be traveling around for a while until I figured out kind of what I wanted to do. Once I'd saved enough money that I didn't need to worry about tomorrow's bills, I kind of took off.
That's dope. That takes some balls, man. That's very cool. When you left the country and you went to Guatemala, how long did you think that you'd be there for?
I don't think I really even had a plan. I was just like I was on vacation in December because we would always have Decembers off at the hedge fund, and I was just like, I don't want to go back. So I just emailed my boss. I'm like, hey, sorry, man, but I'm gonna pursue other opportunities. And it was a very emotional decision, just made by a random 20-something that wasn't really thinking about the future, but it turned out all right.
Interesting. So then why? So how long were you in Guatemala for?
Just like 6 months. Once I got a good grasp of the language, I figured I'd move on and kind of go to the other countries. Kind of, I wanted to see Colombia and Peru and Argentina, kind of the big ones as far as the Spanish speakers.
I should say Guatemala, right?
Either way is fine.
Yeah. Well, my wife has a friend who moved down there, and I don't know. I've got to go down. My wife went once, and she said it was incredible. But she married someone who's Guatemalan, and she actually teaches English down there. Jess, if you're listening, shout out to you. All right. So you go to Colombia after Guatemala. And why Colombia?
It was just kind of the next country I was interested in. I knew some other foreigners that were living in Colombia. Kind of seemed like an interesting scene. Yeah, no, it was just fun to check out the country and the culture and everything. And so I was here on a 3-month tourist visa, and I met my wife. And then at the end of the 3 months, I was like, hey, I've got to leave Colombia because my visa's up. But if we want to keep this going, come travel with me. And so we took off from there.
That's awesome. And I assume she's Colombian.
Yeah.
Oh, okay. So who's Polish? Is anyone Polish? Am I making that up?
No, my ancestries, my grandparents were Polish immigrants to New York.
There you go.
Yeah.
There you go.
That explains the last name. Obviously, Bezek, not a real common U.S. last name.
Yeah. Interesting. Dude, that's wild. That takes a lot of guts. So how often do you get back to see your family?
I was back once. I was thinking of you because I've only been back once last year to visit my grandma right before she died. I was thinking about you. I know you've been through a lot recently, and yeah, it's tough.
It was a lot, man. You know, the hardest thing about it is it's hard to get the memories of the last days out of my head and to remember the earlier memories. But something that's nice is I've been going out and I'm like cleaning out the house a little. I've been reading, like, she printed out emails, and I don't know, just yesterday I was reading an email that I wrote to her from like 2003. It It was kind of nice. I was like, the smiles were starting to come back, But it's tough to watch. It's tough to watch somebody die. Anyway, I digress. I'm glad you got to see your grandma.
But yeah, with COVID, I mean, it's been tough. My wife doesn't have a visa for the U.S., so I can't really come until we get that sorted out. But there's a 2-year wait at the State Department in Bogota to even apply for a visa for Colombians now.
Dude, that's crazy.
It is. It's a complete, what is the word, abrogation of duty. Like the government's just not providing basic services for people.
Well, especially too, since you're a U.S. citizen, right? I mean, not that I don't know. The passport system is super backed up too. It's like stuff is just kind of crawled to a stop. If anyone at the State Department's listening, I love you. Please get my passport done because I'd like to have it back. But no, it's frustrating, huh? So okay, so I sit here and we're talking about these issues and. Then I think about emerging markets, and I think that the U.S.-centric, or at least the Bill-centric way of thinking is like, boy, well, aren't they a real mess? And I wonder to what extent living in the U.S. through one of the U.S.'s greatest times has maybe, I don't know, made me overweight the quality of the U.S. relative to the quality of emerging markets. And you're somebody that makes me think about it, so... Again, thanks for joining, but what do you think of that?
Yeah, I mean, macro isn't my strong suit. And I guess I would just say, like, obviously the US has done tremendously well kind of since World War II, but we could have been in Germany, we could have been in Japan. There are lots of other developed countries that have had very mediocre equity returns over the past 50 years. And so, I don't know, obviously the US has done very well. There's kind of some blessing there in terms of kind of the demographic and structural things that have made the U.S. perform very well, but it seems risky to me to go kind of the majority of one's capital on any country, because I think we just see so many examples historically where countries that appeared to be on a good path ended up taking a worse turn. So I think diversification is kind of one of the only free lunches in investing.
Well, there's a strong chance that you're going to be following Meb Faber, and Meb and I basically talked about this exact same thing. So
that was one of my favorite episodes of Business Brew. Was the Meb Faber? Yeah, for sure.
Oh, this next one's good too. I love Meb. If people don't like Meb, I think that they don't like themselves. Meb is a cool freaking guy. Anyway. So I've noticed. I mean, you pick what I have seen, and I don't want to put you in a box that is not accurate, but the most prominent picks that I think of are the Mexican airports, and now you have been sort of beating the drum on Colombia. So I don't know, do you want to go into, maybe we start with why Colombia and why now, and why there's so little appetite to listen to the pitch for it?
Yeah, and I think just to give people a perspective, I'd say probably 2/3 of my capital is in very defensive kind of consumer staples, kind of compoundery sort of stuff that I view as having very low terminal risk. And so that gives me kind of the ability to take a lot more risk with the other third of my capital. And so
that 2/3, is that where, I mean, do you think about where it's domiciled, or are you just looking for like very high quality businesses and whatnot?
Very high quality businesses, and just stuff where I think that I can make like 9 to call it 12% a year with little downside risk. So kind of call it the Diageos and Johnson and Johnsons and Hershey's and that kind of stuff. And that gives me kind of the confidence that I can go take some swings at some stuff kind of in emerging markets or in more dangerous places where if I'm wrong, I'm not endangering my family's assets.
Yeah. That is, surviving is the key, right? And then if you can have, I mean, I tend to agree with you that if you have a slug of capital that is sort of your get rich capital, take some risk with that. And then there's the stuff that can grow and you can do it the old fashioned way. But so let's talk about Colombia. What's so interesting about it right now?
Yeah, so I think historically we've been kind of the let's call it third most successful, most prominent Latin American market. We have a long history of of performing kind of in terms of our largest bank has been listed in New York since 1995. We have a long history of treating capital well. Until last year, we'd had conservative government for more than 30 years in a row. We'd had strong GDP growth. We generally have decent trade. What's it in terms of trade? Just we've been kind of a pretty successful economy. No one would look to us as like Singapore, but we've done reasonably well. And yet our assets had become very depressed since 2014 because half of our exports are oil. And so obviously with the crash in oil prices, people had already kind of lost interest in our stuff. And then last year, we elected a socialist president. And so kind of everything that was already down, everything was down 75% from 2013. And then it dropped like another 50% after he won. And so... Oof. We're just at brutal prices. Yeah, I believe our ETF, there's been a reverse split along the way, but our ETF was like at 80 at one point. Now it's like 14 or something. It's just...
My goodness.
Yeah. It's just wild because, I mean, oil is our main export and now oil is back up. Our oil company made more money last year than it's made in any year in its history. And yet our stocks are still trading like absolute trash.
And well, so, the argument against it's going to be that your president's going to not allow the shareholders to get the profits, right? Or he'll redistribute it throughout the country.
Yeah, for sure. Yeah, the bear case is pretty clear, and it's a reasonable one. I totally understand, especially living here. I understand the downside argument.
Well, what is it like to live there? I mean, because I think that one of the potential misperceptions that could exist is that we hear, those of us that aren't in Colombia, hear the word socialist and associate it with strict socialism. I mean, how does Colombia think about socialist as a definition, do you think? And is it as strict as maybe one's brain fears?
Yeah, I think that's a great question and framing. And I would say that historically, obviously, we are neighbors with Venezuela. We have more Venezuelan migrants here. We have more than an estimated 2.5 million undocumented Venezuelan migrants here due to what's gone on with Chavez and Maduro, kind of on our border. And they tend to live in tents. They're very poor. It's been a huge social problem for our country. And so people have a very highly skeptical view of kind of full-bore socialism. And our current president got elected on kind of a message that the conservatives had been in power for more than 30 years, and it was time to try something different. But he campaigned on just kind of normal, kind of Bernie left-wing stuff like free college education, kind of more government control over healthcare, stuff like that. But yeah, when he was campaigning, we didn't get the sense that it would be kind of revolutionary. But kind of over the past 2 weeks, he's taken a turn to the left, which is kind of why we've got the crisis pricing, but also potentially the opportunity now.
Okay, so I guess one natural question from this is how do you suspect, I mean, this is politics here, but I think it matters. How do you suspect the public reacts to him taking a turn to the left? And are you saying, look, today you're paying crisis prices for maybe the fear of policy that may not come true? And if the policy does come true, it's a population that likely won't support it long term, and we could have a regime change that could lead to unleashing economic activity and a subsequent re-rating.
Exactly, yeah, that's a great framing. When he was elected, his approval rating was in the high 50s. He had a decent mandate, but his approval rating has now dropped to about 25%, and his
wow.
His VP is also brutally unpopular. She's been hit with a bunch of corruption scandals and kind of spending a lot of money on private jets and stuff. And so I'd say his government does not have a mandate at this point. And just kind of over the past 2 weeks, all of his allies in Congress abandoned him. And so now he doesn't have support to get anything through Congress either. And so, yeah, we just got this very interesting situation where he's where he's kind of calling for a revolution. He's calling for people to go out in the streets and try to kind of change things up.
People are like, no, I don't know that we want to do all that.
Yeah, but Congress has abandoned him. The courts are telling him to get back in line. And so, yeah, it's a very interesting situation. And to me, frankly, it's weird that there's hardly any coverage of this in the English language media. You'd think a country of more than 50 million people that has been historically kind of the U.S.'s strongest ally in South America would be worthy of some press, but it's kind of an ignored story.
I'm sort of glad you said that, because my news reading could use a little bit of work, especially recently. However, I've been trying to find out what's going on, and I found it remarkably hard to find out what's going on. So I'm glad it's not a me issue, and you're saying it's just an issue. It makes me feel a little less like a dolt.
Yeah, this may just be, I worked for the college newspaper and university, and I have a lot of respect for journalism, and it makes me sad to see kind of all the layoffs at the big newspapers. I feel the press does a very poor job of covering anything where there's not sensationalism involved.
Yes. Well, yeah, not to get, we're getting political. That's kind of what worries me. I mentioned it now a few times on this pod, but, and I know that some people may chuckle when I say it, and the old me would have chuckled too, but like, I've been reading Dalio's book about the changing world order, and one of the comments about, he did an interview with Julia Roche, shout out to her, and he said that the thing that makes him nervous is how we treat each other. And I thought that was an interesting comment, because I was just at the section of the book where he talked about when societies begin to break down, it's when the media starts to become more sensationalist and less fact-based, and we get into we fracture as a society and stop treating each other as though, we're citizens of the same country. And, it's funny because I moved from Chicago, which is pretty blue, to an area of Florida, which is pretty red. And, I tell my friends and stuff that I'm talking to, I'm like, look, we're all pretty similar. I don't think we're as different as it may feel, So it's kind of interesting, because I'm juxtaposing in my mind that my perception of the safety of the U.S. with how much I perceive there not to be safety in Colombia. And what I find interesting is you're saying this man is doing kind of what the feared case was, but he's losing support. I think it would be much scarier if he swung towards maybe power in the left and people supported him.
Yeah, for sure.
Sorry for the rant.
No, of course. Yeah, I totally agree. Yeah, I would just say that when Chavez started his anti-democratic campaign in Venezuela, he had more than 70% approval rating there. And so it was much easier for him to brush aside the institutions. And Venezuela had democracy for a much shorter time, whereas here in Colombia, we've had a constitution with steady democratic rule and no crises since 1991. So it's not the U.S., but it's more than 30 years in a developing country. It should stand for something in terms of having a framework for kind of institutional success.
Are the cartels still an issue down there, or not really?
Yeah, I think it's kind of a different problem from the problem that would be happening with the institutionalized government. But yeah, there's definitely still
I just didn't know if they had influence or whatever. I don't know. These are the things that pop in my head when I hear the word Colombia, right? Which is it's silly, or maybe it's not. I don't know. But when I hear it, I'm like, oh boy, I don't even know that I want to go down that rabbit hole, because what am I going to figure out? And I think that's exactly what you're saying creates the opportunity.
Yeah. As far as the cartels go, I would just say that their power base, kind of their largest power center is in Medellin, and yet Medellin has now become kind of like the tourist hub, kind of has the most expensive real estate in the country, and so clearly it's not a limiting factor on the economy to the extent that it was. Now, kind of to the extent that the cartels are active, it's all like out in the Amazon, where nobody really travels unless you're in the oil industry.
Yeah, interesting. All right. So I mean, when look, you're not here to pitch anybody. I don't know how to ask this because part of me wants to say, okay, well, what should I do? And that's not what I'm actually asking. But how are you going about this? And I mean, like, I guess it's funny. I pulled up, I think it was a cement company. I basically tried to find the highest quality companies in Colombia. And one of them, I'm almost certain, was a cement company. And it was so cheap. And then somebody said to me, well, it's not aggregates, it's cement. It's like, okay, man, but like also it's cheap. So curious how you start a journey like this. It seems to me that you're saying, okay, the country on average is likely an opportunity. So then does your mind go to, I'm looking for a higher quality business within an opportunity set? Or are you looking for like the junky stuff that really has juice? Or do you say I'll do a little bit of both?
I think in the case of Colombia, there's only kind of a few listed companies in New York, and so your opportunity set is fairly limited. So you don't really have to choose too much. It's funny you mentioned that cement company though, because hidden under the surface, they own kind of more than 1,000 kilometers of toll roads, and they also own the Bogota airport. And so you may be looking at it and think, oh, it's 4 times earnings, that's cheap, but it's a lousy business. But they
turns out not so much.
Yeah, they keep the rights to a lot of the stuff they build, like in terms of getting royalties off of the stuff they build. So I think that's actually a better business than people might expect.
Huh. Well, but okay, so you're not, I'm more interested rather than specific stocks. I'm more interested in how you're thinking, and you're actually on the ground and you may have access to more companies than I do. So like, how are you thinking about identifying your opportunity set, right? Because, my man Greenbacked, shout out to Toby. I think the deep value guy in him would be like, oh man, you got to buy like the real deep value, because when it bounces back, it's going to really spring hard. I'm a little bit more of I like the idea of a depressed market, but I'd maybe favor a higher quality bent. I that's just how my mind works. Curious, just kind of how your mind works.
Yeah, I think particularly for foreign investors, kind of both of the largest companies by market cap and by trading volume. One of them's the big bank, and the other one's the oil company. I think both of those offer good exposure to Colombian assets. Kind of both of them have a high enough market cap that institutions can take part and have decent trading volume, are listed in New York. And so I think that would be the obvious place to go looking. I'm not pitching specific stocks here. I'm just saying those are kind of the most clear opportunities. Because like if you're trying to pick out individual companies on the Colombian exchange, just volume's awful. But yeah, those two that are listed in New York, Bancolombia and Ecopetrol, have good trading volume.
Do you pick out the individual companies though on the Colombian exchange? Like what does Ian do with his time and money, right? You move down there, you're making it work for yourself. How are you investing your capital?
Yeah, so last year, I guess it's 2021 now, our largest insurance company, which is only listed in Colombia, had fallen to 0.4 times book value. And I viewed it to be a pretty good business, had kind of a double-digit ROE, and was just trading at this ridiculous valuation. And so I opened an account here on the Bogota exchange, which you have to show up in person at a bank, like with like physical papers to open an account. And so I opened an account and bought a good chunk of the stock. And then about 3 months later, the bank started buying back stock. And this was the first time there had been a buyback program in Colombia in 20 years. Colombian companies normally they pay dividends. They don't buy back stock. But at this price, management was like, this is so silly that even we felt compelled to buy back the stock. And then,
good for them.
Yeah, and then a few months later, you had an activist come in who ended up taking out the company at like 0.8 times book value, which in my opinion was still too low, but it worked out pretty well.
Yeah, nice to be that activist. Shout out to them. They should come on the pod. That stuff's cool. That kind of reminds me, man, I can't mess this up. I'd feel like a real idiot if I did. Was it Dan Loeb that was going around to thrifts he was opening up? Yeah, accounts and thrifts. Kind of reminds me of you, like walking down to a bank and being like, "Here's my papers. I gotta get into this."
Yeah,
That's
exactly.
neat that there's those kind of opportunities. That's exciting.
Yeah, that's the one Colombian stock that I've bought in Colombia rather than on the New York Exchange.
The banking industry down there, how consolidated is it?
The top three banks have 70% of the market. The government has protected them heavily from foreign competition. There's kind of an unwritten understanding that the banks are allowed to make excess profits, but the government will never bail them out. So kind of they run very conservatively, I think.
It's the opposite of here.
Yeah. Both of our largest banks grew their profits and increased their dividends in 2008 and 2009, which I think makes them just about the only banks in the world that were successful during that period.
Interesting. Here we like to crush our banks, but then bail them out. It's like, a little bit different. Huh. Wow, that's interesting. So what else are you looking at? Like, do you feel like you can, I guess, what is your competition like down there is maybe the way that I want to ask this question, because it seems to me that getting on the ground, like you got a real opportunity to do some things that a guy like me that's not flying down or not native doesn't have the chance to do, and that can get exciting.
Yeah, I think that's a good way of thinking about kind of the investing question more broadly, is in terms of, I mean, it sounds trite to say this, but what's my edge? What am I doing that not everyone else can do? Because everyone has access to a Bloomberg, everyone has access to a screener, everyone can see the same valuation data. So it's like kind of, what perspective can I have on the world or on markets that is going to give me something unique? And I think truly kind of diving in, like not just, I mean, anyone can learn a second language and kind of read the local news, but just living here, I've built a house here in Colombia. I've kind of experience with the business community. And so I think that gives me kind of a different perspective from someone who's in New York or London trying to parse over the same information.
Yeah, definitely. I wonder, it would be really exciting to be in your shoes right now, because I think that there are, where I'm going with this thought in my head is there, if it is true that you only need to make a few good decisions, and it is true that the math works in your favor when you buy cheap and then let things go, which everything I've ever seen leads me to believe that it's true. Like, man, to be in a market that's that depressed and to have local knowledge and boots on the ground, that's like an exciting time. That's not how I feel here.
Yeah, U.S. stocks. I mean, I think there's some opportunities in some parts of the U.S. market, but you're certainly not getting fire sale prices.
What do you think of that? When people say, well, the U.S. has better businesses, and I mean, I've been one of these people, so I shouldn't say people, but with Colombia, you're buying a bank. So what, that bank should, I don't know what what ROE does it generate roughly?
19% 10-year average.
Okay. All right. So
it's a very good business. Because like I said, there's just no competition and there's hardly any informal lending either. And so like they're charging like 17% on mortgages now. They're paying 9.
Wow.
They're paying 9 on deposits. They're lending at 17 and collecting 8. It's good business.
Yeah. Interesting. I mean, and maybe it's modier, so you can pay a little bit higher price. Okay. And then the oil company is a commodity. I guess what I'm saying is, like, on a blended average, should the multiple be quite a bit lower than the U.S. market?
Oh, for sure. Yeah, the multiple should be far lower. But the bank, for example, is trading at 4 times earnings now. The bank's going to earn more than $6 this year, and it's trading at $25 now. So I would say it's cheap enough to. I mean, if you think the right multiple is 6 times or 8 times, you're getting a large total return from this price.
Yeah, and I would also think that there's, I don't know, maybe there's not a ton of reinvestment risk, but if you're a reinvestment opportunity for that kind of a bank, given that the market is already pretty consolidated, But if you're buying into an economy, I mean, it's a decent way to play the macro call too. I would think in both ways, right? There's some risk with that too. I assume, but
Yeah, historically, dating back to the 2000s, they've paid 50% of earnings as dividends, and then they reinvest the other 50% in growing their loan book. And up until oil crashed, the economy had been growing at 5 or 6% a year, kind of through the 2000s, early 2010s. And so historically, there was a lot of opportunity to reinvest in the business, but the last few years, not so good.
yeah, that's what I was thinking. You're kind of it's interesting. The bank and the oil company are probably quite correlated because the oil is going to drive a lot of the local economy, right?
Mm-hmm.
So where else do you go in South and Central America? I know you traffic in Mexican names. The airports, I can't believe I did not just buy and hold those during COVID, but I'm an idiot for many reasons, and that's one of them. I fault only myself, and thank you for not only pinging me, but pinging me a number of times and telling me, by the way, you should look at this. Instead, I traded into other things like a moron. But
No worries. No, I was looking at the whole aerospace place. I think I looked at Spirit Aerosystems, like you were looking at. I looked at. Yeah, I should have bought TransDigm. TransDigm was a error of omission on my part.
But it's not that easy to hold for me. I know that there's compounder bros out there. My man Kyler, I know that not and Viggy. Like, I know that people know how to hold those names. I don't know, man. You get like a free cash flow yield. I don't know what's it. Forward's free cash flow yield is like 4.5. And that's to equity and it's levered. Like, I don't know that I have that in me. I think the airports when you were, I mean, TransDigm back in the crisis was much easier, but man, that was fun. That was fun when everything was exploding. It was like one day you could just kind of see whoever got liquidated, like that Liberty Sirius XM, they all just kind of like just fell off a cliff. Huh. Oh well, you only get so many of those opportunities, I guess.
No, yeah, I went into March 2020 like 140% levered long, and then like my largest holdings, which were the airports, were down 70% 2 weeks. So
wow, that would not be fun.
That was not fun for me. But
oh, I'm sorry for that, but I'm glad you survived.
Yeah, made it through.
Yeah.
I had to sell some of my beloved staples companies, though, like the stocks that I said I'd never sell, and then I was forced to pitch them in April because just everything else was so ridiculously cheap, and I needed my margin.
Yeah, that's it. So okay, so would you do that again? I mean, we're going back to February, right? Because inevitably you're going to have another in 10 more years. By then, something is going to happen. We'll probably be there's going to be another bull market. Is that one of those investment experiences that you think is going to sear into your mind, or do you think that it was the right decision to be that long and there was a card that came out that, like, would you make the bet again even though the result was not ideal?
Yeah, honestly, I think it was the right bet. It was a bit of bad luck, and maybe I should have been 120% long instead of 140% long, but I think using cheap leverage is kind of one of the better opportunities we have, assuming we own good companies.
Yeah, I don't, but I don't know. I know that I should not. I don't know that I shouldn't allocate to some people that do. Is maybe the best way I know how to say it. And you know what's funny is I used to. Do you short at all?
A little bit. Working at a hedge fund that was a short selling firm, I think I learned how difficult it was. Like, even if you're at a professional shop with a bunch of high quality analysts, it's still a tough game. And so it kind of made me think, just me as a retail guy, not the best use of my time, but I do short a few things occasionally.
Yeah, I feel the exact same about myself. But I have come to appreciate the merits of running long short and what it does. I mean, it sounds silly, but I didn't know shit when I started this whole journey. So now I know a little less than are a little more than I knew. I still know I don't know a lot, but whatever. So we got the airports. What I liked, I was talking about the Spirit merger, and I said, I don't think the Spirit merger should get done, but I do think that Spirit and Frontier should get done, and that entity might be interested. And you just popped in, you were like, well, here's Volaris and here's the airports, and look at how much better the airports did. And I thought it was a very good little reminder of why you like that idea. So do you want to explain kind of what intrigues you about that idea so people can understand how you think?
Yeah. Just backstory for people that don't know. Volaris is the largest airline in Mexico. It's been exceptionally successful, growing from 10% of the market kind of a decade ago to 40% of the market now. They have the lowest costs of any discount carrier in the world, kind of based on kind of the best EBITDA margin. And the stock has produced a total return kind of minus 10% since it IPO'd, which was like, even if you have a great management team, it was like born out of Ryanair folks that should know what they're doing.
I don't think it was Ryanair. I think it was Indigo Partners, but same thing. Yeah. I mean, not the same thing, but same model.
Yeah, exactly. But yeah, even if you have like the best people and kind of a good market and you operate very well, it's just very hard because they would get hit on fuel, they get hit on currency, they had pilot issues at one point. It's just such a hard business. Your profit margin is what, 15% in a good year? Whereas the airports have 70% EBITDA margins. So that gives you a lot more room for problems.
So, but your risk in the airport is what? That the municipality basically says you can't, these profits are not for the shareholders, they're for the people? I mean, is that the real risk here? Because once you have an airport that's built, hard to see how somebody's going to compete with that, unless you're going to argue there's going to be another airport, but that's not going to happen in most places. So, I mean, what are the things that can go wrong in an airport from an owner's perspective?
Yeah, but I'll just talk to the Mexican airport specifically. I think the biggest issue there, at least in terms of getting foreign investors comfortable with these stocks, is that they have 50-year concessions that expire in 2048. And so people are worried about what happens at the end of that time period. And also along the way, every 5 years, the airports make a master development plan with the government in terms of how much money they're going to invest to grow the airport capacity, kind of new terminals, new runways, new hotels, whatever. And then the government raises their tariff kind of in proportion to how much capex they spend. And so there's always concern, like if you get a government that wants to play hardball with the airports, that kind of every 5 years you have some political risk. And then in 2048, you could lose the assets entirely. They're supposed to be renewable out to 2098, but obviously no one has a crystal ball to know what the Mexican government will look like in 2048. So you have kind of a limited cash flow picture. In my view, it's not a big problem because it's 25 years of cash flow, but other people, it's a sticking point.
Yeah, I mean, so some of the bears that you talk to, I mean, why would a deal not get done in 2048? I mean, I understand the government may just say, well, we want it, but like, I don't know if it's a symbiotic relationship. Yeah, I mean, everything's a probability tree, right? So there's some probability that there's a zero on this, but assigning that probability seems like a much harder judgment exercise than. My sense is that people are probably too binary about it.
Yeah, I'd agree with that framing. And I'd point out that kind of one of the, there's 3 publicly traded Mexican airport companies. One of them invests for growth, but the other 2 just pay out 100% of their free cash flow as dividends. And so kind of just over the past, call it 6 years, kind of OMAB, for example, ticker OMAB, has gone from paying $2 a share in dividends to more than $7 a share in annual dividends. And so people can say, oh, the cash flows may disappear in 25 years. And yet it's like you're getting just a huge chunk of your money back every year because management has specifically said our goal is to pay the highest FCF, like the highest dividend per share that that's offered on the Mexican exchange.
Oh, wow. Interesting.
Yeah, Mexico is known for having a not very shareholder-friendly governance in general, and so when you have a company that comes out, like they bought back like 8% of the company last year because they said our shares are too cheap, and we want to improve our ROE. They're like, this is the best move to optimize our FCF. You just look at this like, wow, a Mexican company that understands like Harvard accounting principles. Yeah.
I don't know that I love the improve the ROE thing. I mean, I get it. I don't know that I love it, but I mean, look, if you got a business like that, giving all the money back to shareholders makes a ton of sense. I know somebody's going to argue that it should be buybacks, but my whole thing with the dividends, I've seen too many management teams like shut the buyback off or be pro-cyclical with it to trust the dividend. And I can hear Jake from Econopic or whatever. I can hear him in my ear being like, well, you could sell into it. But then I introduce my own behavioral bias. I like dividends because I think they remove two layers of behavioral biases, which, I am a strong believer that humans are not perfect. So I don't know. I'm sure that I am not theoretically correct in my take on that particular thing. What's the free cash flow yield?
I just bring that up because Mexican equities are not known for treating it kind of has a collegial environment where you have families that run most of the companies and they kind of treat them as their own private fiefdoms. And so when you get a company that comes out and says, basically, we're following U.S. accounting practices, we're running this company for the good of our minority shareholders and not for the good of, not primarily for the benefit of the CEO. It's kind of just interesting. Kind of it makes you raise your eyebrows and say, hey, this company's doing something different.
I had heard a rumor that it's not particularly prestigious to run a company that's listed in Mexico. Is that an accurate rumor that I heard, or do you not? I heard that like kind of the most prestigious thing is the bigger private businesses in Mexico.
I don't have the data in front of me, but if I recall correctly, Mexico's economy is like 15th or so in GDP, in total GDP, PPP. But the stock market's equity capitalization is like in the 30s, which indicates that the stock market is way smaller than the actual size of the economy. And you have huge businesses that just choose to stay private, or they only list a tiny fraction of their shares to the public. There's just not really the interest in public companies there. I think that probably, if you look at in dollar terms, the Mexican stock market peaked back in 2012, and it's been kind of an 11-year bear market. So there's just not really much interest. There's hardly any IPOs. I think that's part of the reason why I've been banging the drum on Mexico recently, because you've got this huge fundamental shift in terms of people moving supply chains out of China, out of Asia, and back here to North America. And Mexico looks like the obvious winner from that. And yet the capital market there is so small that, like, if you get a bunch of people saying, I need to put 5% of my money in Mexico, you're going to have way more demand for shares than there are shares outstanding, if you catch my drift. So I think you're just going to see this huge flow story. I think that's part of the thing that we have to think about as investors. Like, where can I find something that other people aren't looking at? And this is just a market that no one's cared about for many, many years. But you've got positive fundamentals. You've got earnings growth. The peso has been appreciating. You have ton of foreign direct investment coming in. So, sorry, rambling answer, but
I'm like a
huge Mexico bull here.
Yeah, I mean, it's kind of correlated to the U.S., I would imagine, but I would need to run the data. But I suspect our GDPs are pretty correlated.
I think that gets back to your earlier point. Like, it's interesting in terms of, like, if you want to bet on the U.S. supremacy, or kind of the Peter Zeihan view of the world, that the U.S. remains the dominant economy. I think Mexico gives you kind of a cheaper, better demographics, kind of better angle for kind of the industrial side of that. Just if you buy the S&P 500 now, you're getting so much big technology, which is fine. They're good companies. Amazon, Google, whatever, they're great companies. But if you want that exposure to logistics, to industry, I think Mexico gives you a great way to play kind of the NAFTA, kind of the emerging free trade bloc here.
Yeah. Like I could see like industrial gas companies in Mexico being potentially interesting. like something that's really moody from a real asset perspective, but cheap on a, sort of a part of a lower valuation market, I guess is what I'm thinking.
And Mexico is a much larger market. There's a ton of individual equities across whatever kind of industry you could want. And so I own the company that makes water tanks, for example, which I think that'll be a great business because I think the Mexican housing market is dramatically underserved. There's a huge wipeout. Most of the home builders went bust in the 2010s. And so in my view, we're call it maybe 3 to 5 million houses short of where Mexico needs to be. And so I think you're going to make a lot of money selling pipes and water tanks and stuff. It's kind of a boring idea. No one's going to get too excited about selling water tanks, but I think it's a good business. Gives you kind of that emerging market demographic growth story. Yeah, and management is also very shareholder friendly. They're specifically aiming to get a 20% ROIC, and kind of all their investment decisions are based around improving the margins. So I think it's kind of a fun story. And you've got various examples like that of stuff where you can play Mexican consumer, Mexican demographics.
Yeah, I think I saw a pitch on a Mexican toll road company that I was pretty intrigued by. It was a Manual of Ideas. Shout out to John and them. That's interesting, man. I don't know. I've got myself on this kick of I'm trying to figure out how to create a situation for myself that is more resilient. And as I take a hard look in the mirror, I think it's hard to argue that I don't have too much home country bias in my life. And I'm open to, I think ETFs are probably the smartest way for me to play some of this stuff, but I know I need more global diversification in my life because, I don't know. It's like owning a whole bunch of stock in the company you work for. Like, I'd just rather kind of hedge some of that risk off.
This is the issue I've had with living in Colombia because I built a house here, so obviously I have capital that's stuck here. You can't just hit a button to sell kind of at a house.
Yeah.
And then I took large positions in the Colombian equities kind of over the past few months because I believe they were dramatically mispriced. And I think they're still dramatically mispriced, but I've kind of reached a concentration problem where I live here. And so my quality of life will get materially worse if my thesis is wrong. And I'll potentially lose a lot of equity in my house and lose a lot of money in my investments. And so I think I may have over allocated here. But yeah, home country bias, it can get you wherever you're living in the world.
Yeah, but you said a large portion of at least your liquid net worth is in staples, right? So you're somewhat diversified in that way, I would suspect.
Yeah, for sure.
It's a hard thing to figure out, like the dynamic between I think I see an opportunity and I want to play offense versus there's the part of everyone that needs to be, you need risk rules, I think. I've heard Hampton talk about it. I'd love to have him on sometime to like really have him. I mean, he's done it elsewhere, but I'd like to talk to him about kind of how do you set those rules for yourself and say like, I'm not going to lose X percentage on any given bet, right? Because to your point, it's easy to look around and be like, oh, well, I'm fine. You're going to raise your kids there, though, presumably, if you have them, right? Are you guys, well, I shouldn't, I don't know. I'm prying in your personal life. But I said, if you're going to raise your kids there and you're going to be in Colombia for a while, or if your wife's family is super tied to it and you just built a house, like, I don't know, some of that stuff, you'd be paying rent anyway, right? So build somewhere that you want to live and the chips are going to fall where they may. I don't know that that's the most, like, investment focused decision.
Yeah, I think that's probably the right approach.
Yeah
I love that Hampton post that you referenced in terms of how many times can you average down on something, and I am very cautious. I hate averaging down. It just feels awful kind of buying because it's like it feels like I've made a mistake here. I prefer averaging up, and I know that's contrary to most people, but I'd rather put more capital into stuff that's working.
Yeah, I would rather buy stuff higher when the fundamentals are improving than average down when the fundamentals are deteriorating, because my rebuttable presumption is that I'm wrong. I probably should just sell those situations, but I don't know. I kind of like having a rule that says I'm not going to sell for this long, and my turnover has gone way down, and I think my life is better for it, and my results are moderately better to basically the same. So I'm not sure that turnover is what I need in my life. Plus, taxes suck.
Yeah, I take a view of I try to take a buy and hold approach to everything. And I mean, I'll sell if the thesis breaks or I just fundamentally misunderstood something. But I take the view that it's better to stick with stuff that I understand rather than constantly moving in and out of stuff. So yeah, I share your view as well.
Yeah. What else? What else intrigues you? You look at Japan at all? People are very bulled up on Japan right now.
Yeah, the issue obviously is I don't speak Japanese, so I've never been there, and so I don't feel I have any insight that other people wouldn't have. But I own some of the consumer staples companies. Like I like Shiseido, which is the cosmetics company. I think it's a big discount to L'Oreal and Estee Lauder. And at some point, Chinese travel probably comes back. I mean, I've been early and wrong on this one, but it feels like the third largest cosmetics company in the world should trade at a reasonable multiple compared to the other two at some point.
Yeah. Yeah, that's cool, man. I like that. What was your life like as a short seller? I know that you said that you obviously preferred to move to a different country and escape it, but is it a experience that you look back at fondly and you're happy you had?
Yeah, for sure. I wouldn't trade those years at Kirstel for anything. Yeah, I'd say my bigger issue is just with the culture. Kind of, I don't like how the U.S. is going, and I particularly don't like how the big cities are going. I think the quality of life you get for the amount of money you spend in a city like New York is atrocious now. And I saw so many of my coworkers or people working at other hedge funds that were kind of 10 or 15 years older than me, and they were all kind of divorced addicts to something or another. And it's just like a terrible environment, in my opinion, to raise a family. And so to me, it made sense if I could make some money online and live somewhere else, that would be a much better situation for myself and my family.
How has your writing gone? Like how's the experience writing for Seeking Alpha, and are you able to generate some income through your writings, and or is it primarily doing other things?
Yeah, I earn enough money off writing that I never have to tap my investments to pay day-to-day bills. And so that gives me kind of the staying power to stick with. Kind of in March 2020 when I was getting my butt handed to me and on my margin margin account.
Yeah.
But I knew I had money coming in so that my wife and my kids would have whatever they needed. So I think
How
yeah,
how
I
did
think
you
that's
get that?
important to not to have something, just to have some cash flow. I think that gives you a much better mental frame to be able to hold on kind of in volatile markets.
Yeah, 100%. How did you so you just started writing in Seeking Alpha days. How did you how did you build a following? It was just continuing to write. Was that you kind of the OG Substacker in a way? Or not, if not the OG, but you've been doing it for a while, right? Maybe not through Substack, but
Yeah,
writing before writing was common.
I've offered my newsletter through Seeking Alpha since 2016, and then I kind of offer it on Substack now as well for people that don't like Seeking Alpha. But yeah, I think it's a good opportunity, and people that want coverage of whatever it is that's on my mind. Often it's Latin American stocks, but also kind of high quality stuff in the US or Japan or wherever. Yeah, I think it's a great business model in terms of people can support kind of just whatever journalists, whatever writers that they like, and they don't have to pay for all the office buildings and glitz and glamour of kind of the old model of New York Times and whatever, where they wasted so much money on stuff that didn't kind of help the actual journalists, if you know what I mean.
Yeah. No, I do. I think it's going to be interesting to see how this all evolves. On the one hand, paying like, I mean, what do you charge? Yeah, I mean, for your newsletter, what do you charge?
$500 per year.
Okay. So I can hire you as my analyst if I like what you're saying for $500 a year. Like, that is insanely cheap. On the other hand, it's, easy to start to subdo a lot of these things and be like, oh man, what am I spending on subscription? So I kind of wonder, like media is going, I wonder if the writers start to bundle or if everybody remains sort of fragmented. I don't know. Sort of talking a little bit about what I'm thinking too, but it's one probable route that I end up going, but I'll probably write about a lot different things than y'all write about. And then maybe I'll throw out some ideas. I don't know, but I'm not sure that's the best. I'm not sure that's the best way for me to add value in this financial ecosystem that we all live in. Like from an idea perspective, at least not strictly.
When the first article I got published on Seeking Alpha was back in 2008. Obviously, it was all ad driven at that point, and so I think was that 15 years that I've written there, and we've seen a tremendous change in the business model from ads to now kind of the premium and newsletters and all. And I think people just have to be flexible, particularly with how quickly Google and others innovate. There's no guaranteed cash cow in online media. You have to constantly be evolving to find whatever works today.
Yeah. Well, it's neat that you're able to live where you want to live and write. I mean, what an incredible time to be alive, man. It's a whole lot better than it ever has been. Sometimes when I get myself down, I'm like, what do I have to be upset about? And the answer is usually not much.
Yeah. And I have to keep a bigger perspective. Obviously, it's been a very disappointing kind of developments with our local political system here over the past few months, and yet it's like still it's just a fortunate opportunity to have been here and had the chance to meet my wife and my family and everyone. And it's just, who could imagine just kind of being born in New York City that you'd get to move to another country, learn a different language. And yeah, the world offers a ton of opportunities now for people that have ambition and want to try something new, see where their skill set is most useful.
Here's a debate that came up on the Twitter machine that I'd love your opinion on. Better to live in crappy weather to enjoy the good weather, or better to just live in the good weather?
No, I'm totally on the good weather side. I can't do snow anymore. I'm so sick of snow. My wife wants to go see snow, and I'm like, only if we're going skiing, and even then, just for a few days, because I shoveled enough snow for a lifetime.
Dude, skiing.
I'm sure in Chicago is the same for you. That you just can't deal with it anymore, right?
It was just so. I mean, look, I love that city. I love the people there. I do think that there's something about being that cold together that forms a bond, and there is a part of that I miss, but I don't miss it. You know what I mean? And then the skiing thing, man, it's gotten so damn expensive. It's like you gotta take out a mortgage to go on a ski trip. It's crazy. So I don't know. I may not be seeing much snow in my future years, and I'm pretty okay with that. I'll visit places in the summer.
Yeah, it doesn't make sense you have such an active FTC at the moment. I don't get why they don't block any of the skiing consolidations in the U.S. That seems like an actual industry where there's a monopoly and the government doesn't do anything, and yet it's like anytime a tech company wants to buy something, the FTC shows up and makes a huge mess.
Yeah, I mean, I think skiing is one of those industries that if they're making super normal profits, I don't know how much people actually care. Whereas like tech is such a political football. What's ironic about tech is that they all use it, right? And they're all the same things that they're complaining about, they're all sort of using as well. But it's pageantry. So I don't necessarily like the Spirit JetBlue merger was one that my initial reaction was, this is bogus, to stop it. And then as I started to think about it, I'm actually one, I don't think it should go through. But even if that's incorrect, I do think that the government has a legitimate perspective to argue that it shouldn't go through. Like, I think that's a fine use of resources. Some of the other stuff seems like they're maybe going a bit far, but what do I know? I don't know that much about Microsoft and Activision for real. So, whatever. Leave it to other people smarter than me to figure out. But it certainly doesn't seem like a great merger environment.
One thing that, kind of moving back to skiing for a second, one thing that's nice about Latin America just in general is I'd say we're still very far behind the US in terms of not everything is corporatized. Like, you don't have, like in Chile or in Argentina, you don't have one company that has monopolized all the ski resorts. And so you still have like families that run their little properties there. And it just feels like, in a lot of ways, Latin America feels like kind of the US that my grandparents had, where everything was smaller businesses. You don't have chains. Like, for example, I'm an investor in the largest fast food chain in Latin America, but it only has 4,500 locations across Mexico, Spain, Colombia, Argentina, whereas in the US, I don't know, I'd imagine Subway, McDonald's, all are 10,000 plus, and you have a bunch of them. And so it's just kind of this idea that you don't have the same chains to the same extent that you would in the developed countries.
Got better demographics too. And then I guess the question is, rule of law in politics. That's always harder to answer on a forward-looking basis than a historical basis, right? I mean, I don't want to underweight what a good system the U.S. has, and I'm super proud of it. I don't want to sound like I'm not, but I got concerns. So I think anyone that isn't paying a whole lot of attention.
Yeah, I think that's a great way of saying it. The U.S. deserves tremendous respect. I think it's been the best political system kind of that the world has seen up until now, but things seem to be on a worrisome course going forward. I would say, though, just kind of in terms of what you said, just it's hard to predict forward-looking. Kind of the most obvious analogy to the situation here in Colombia last year, Peru, they elected a literal communist, like self-professed Marxist-Leninist who was carrying like Mao's papers, like when he went to the office in Lima, and so obviously Peruvian stocks tanked, and people were worried. But his coalition immediately fell apart, and then it became clear Congress was going to impeach him, and so he tried to carry out a self-coup, like he tried to cancel Congress and just say that he was becoming the dictator, and then the military arrested him, and he was trying to get to his helicopter to get away, and the military went and grabbed him off the streets in Lima. And so it's like there was just a couple of decisions where like Peru could have collapsed into a state of anarchy, and instead now it's returned to kind of pro-business rule. The Peruvian stocks have all gone way back up. But I don't know how you forecast that as an observer. You're just kind of watching, and you just have to assign probabilities. Like, what do I think? Is it a 60% chance that things turn out well? Is it 40% chance? So I mean, when the guy's literally trying to take off in a helicopter when his coups failed, it's I don't know how you model that as an outsider.
Yeah, well, I think it's one of those, if you buy cheap enough, something good will happen. I can't tell you what it is, but it's something, right? And then that's got to be some of the mentality.
Yeah, I'll tell you, you were asking what else I was looking at. My largest holding now, and this was not because it was my largest holding when I bought it, but just because it's appreciated so much. I bought the Argentinian airport company during October 2020, and it had IPO'd at $18, and it was selling for less than $2. But I looked at their balance sheet, and they had already gotten funding from the Argentinian government, kind of COVID relief. They got their leases extended kind of as relief for pandemic damage. And the whole company, they have airports in Argentina, Ecuador, Italy, Brazil, various places. But all of the debt was at subsidiary level rather than at the parent company level. And so I was just looking at it, I'm like, I don't see how this goes bankrupt just because they already got more cash. And the stock was obviously, it was just bombed out. It was 150 million market cap at the bottom for 90 million passengers a year of travel volume.
Wow.
Yeah, so I was looking at this, I'm just like, this is ridiculous. It's like maybe it goes bankrupt, and obviously Argentina's an awful jurisdiction to be headquartered in. But at this price, I think you just have to buy a little bit, hold your nose, and hope something good happens. And now, obviously, the stock's gone from 2 back to 11. I think it's worth the IPO price. I think it's going back to 18. Just when you buy at that price, you can make a lot of other sins, dumpster diving when you hit a couple of those.
Yeah. Yeah. I love it, man. I think it's a message that's good to hear after 10 years of up and to the right. And I guess maybe now it's 13 years of it. I don't know, man. It's been interesting. I like to think about what lessons I've learned wrong and what lessons I've learned right. And I think the one that always makes sense is price matters. But it's it's hard. It's not an easy game.
What was your takeaway from the... I really enjoyed following the Zoom versus Qurate bet, and obviously it didn't work out well on either side, but kind of what was your takeaway from that?
I think that I have a couple. I guess that the thing that happened with Qurate that I found interesting was one of the best things that happened to them was the pandemic. And then the flip side of that with the inability to, like, the supply chain problems that came after the pandemic, I think caused a lot of issues with their customer loyalty. And I think what was a huge blessing in a way became a curse. And then, I mean, look, the fire at the fulfillment center, like it just, that sucks. And it took a lot of efficiency out of the system. And it all happened at the same time that, a CEO change happened. And I like David a lot. I think David, one, is a good person. And two, that guy doesn't point blame anywhere other than himself, not at himself, but like he takes responsibility for changing things. He's the kind of person I would want to work for. But, they got a tough hand. And I guess one of the takeaways that I had from it is I didn't lose much, right? So, and that's after tax. I mean, it was roughly break even to a slight loss, but like I paid a pretty cheap price and there was a ton of cash that came in and there was a lot of cash that came back to me and I knew what I was looking for. I probably shouldn't have gotten greedy on the upside, but I was looking for something to happen, and I gave the bet enough time to run, and then when I saw enough evidence that I was wrong, I got out. And for that, like, I think I traded that pretty professionally. So I'm happy with that. It sucks because I all I've wanted to do is I don't know, prove a point to some of the growth people, and like when I made that bet, I remember I was like playing golf and Austin was chirping at me, and I was just like screw you, man. Let's bet this. But, bad things happen to businesses, and there is an element of, resiliency that didn't exist in Qurate, and they clearly have some issues that they gotta digest. So I guess on the Zoom side, price matters, right? But I kind of already knew that lesson. I think what I underappreciated was how much can change in 2.5 years was maybe one of the takeaways.
Yeah, for sure. At the time you made that bet, I never would have imagined. I mean, I would have imagined Zoom was going to drop a lot, but it was very surprising to see what happened kind of on the value side. But
yeah, and look, I mean, some people think that they, Qurate should have retired debt. I mean, I was somebody that was saying buy in more stocks, so like I can't point the finger at that. And Mike and I went back and forth over. Mike wanted dividends because he wanted the cash, and my whole argument was like, this is a habit-based business. This cohort is larger. I want to shrink the share count because if we can keep this cash flow per share should go up quite a bit. But I don't know, man. Darn it, I guess. Oh, well. I'd make the same bet again. And if you give me 10 of them, I'll make them. So, one of the 10 is going to work out really well. And hopefully 3 don't kill you, and if 5 are so-so, and then the next 2 are like pretty good, I think the math of that kind of a portfolio works out pretty well. Hopefully I said 10 positions. Otherwise I got 11 shots or 9 shots. I'm not sure, but I don't know. What did you think? What did you take from it?
I think that I like your point there. I think what's important is getting the process right as investors, and it's impossible to judge our framework, our way of doing things just through one transaction, because any one bet can have exogenous factors, any sort of weird stuff that happens come in. But like you said, if you did the right analysis, you did the right work, and sometimes bad luck happens, but on the whole, just repeat the process, find more situations like that, and you're going to be right more often than not.
Yeah. And look, I wouldn't want, I guess you could argue to me, a portfolio full of 100 of those bets or whatever makes sense. And that could make sense to me. I think those kind of bets, I think of them more as akin to your bets on Colombia, where it's like, okay, look, I've got sort of a safe portion of compounding capital. With risk capital, what do I want to do? And I think those kind of bets, like I'll keep shooting those shots, man. I think that's what the greats do.
Yeah, for sure. I think just for me, it's been kind of interesting trying to decide how to weight the two sides of the portfolio, and particularly when, like I said, with the Argentinian airport company, where something that was a small position becomes a large position, and then it's kind of how do you think about how to weight the rest of the portfolio to keep the same risk exposure, the same beta. I don't know.
Well,
you've made some adjustments too, right? In terms of kind of how you did very well coming out of the pandemic, and then 2022 was rougher. Kind of what did you learn?
21 was rougher, actually.
Sorry.
I incurred pain like a lot earlier than most people did, which was a very lonely feeling. But then it stabilized a lot earlier than other people's did. So that was, I don't know, misery loves company, I guess. I think generally speaking, I sort of started on Twitter because I guess fundamentally I was insecure about leaving my job, and I was worried if I ever need a job again that I need to have evidence that I one, did work, and 2, did good work. And I think that along the line somewhere, I think I probably got a little bit too concerned with like wanting to prove that I belonged in the conversation. And I think I'm a lot less concerned with that now, and I'm a lot more comfortable with just like who I am as an investor. And I don't answer to other people, and I don't have desire to run outside capital, so I don't even know why I got caught up in a game that I wasn't even playing. One thing that this journey and the podcast and whatever has done for me is like, I realize there's a huge difference between investing and being an investment professional, right? And I think being a great investment professional requires that you're a reasonably good investor. But I think a lot of the people that people think are like really great investment professionals are like really good at the business side of investing and not necessarily the actual investing side of investing. And I need to remember that I'm playing not the investment professional game. So, I guess, did I answer your question?
Yeah, perfectly. Yeah, I think that's a great way of putting it. Yeah, and it's unfortunate that a lot of the best investors of our generation probably haven't been able to build the track records that they should have been able to, because they spend all their time out trying to raise money, and it's so hard for small hedge funds now to get to scale. And you have people that they could be doing great investment research, like you said, but they're mediocre investment professionals, and so it's very hard to kind of build the business and make it all sustainable. And I think I saw that working at a startup hedge fund, that so much time was spent on stuff that wasn't material to our investment returns, and that's just a difficult lifestyle. Like you said, it's much easier for us, kind of that we are doing our own thing, and we don't have to prove ourselves. That
Yeah.
said, yeah, I think, and I've heard this on your on value after hours over time, where you're just like, where people shouldn't be following your advice, you're just giving your opinion, and yet kind of once we're out there and once we're kind of the man in the arena, we feel kind of a responsibility to the ideas that we've had before, and it becomes much harder to change your opinion. And yeah, it'll be like, no, yeah, I'll just stop there. It just feels like there's a lot of being stuck with kind of once I've put my name out there on this idea, it's hard to back off it, you know?
Yeah, I think that one of the things that's hard too is like, I mean, look, Qurate is a great example. I mean, I met Shane from Liberty through that. I have become friends with her. I care about her well-being. I care about David's well-being. Like I have gotten to meet Greg a couple times. Like these are relationships that, look, I like Greg and I are not calling each other. That's not going on. But like I know who he is, right? And I root for him. When I sell the stock, I'm not going to like blast the company. One, I don't even know that they did much wrong, right? I think sometimes the cards come out and like I'm not locked into that position. And I remember like I called or texted Shane when I did it. And I was like, look, I'm sorry, but I had to do it. And she's like, what are you sorry for? You did your job, but there's that part of me, and I'm not going to go out and shout over and over again that I sold it, because I don't want to have any responsibility for their stock going up or down, but definitely not down. And I guess that the one thing that I'm proud of how I've sort of gone about all this is I've never, my capital is risked, right? And I'm not running anybody else's, and I do not want anybody else following me. And if people listen and they're foolish enough to buy, I try to tell them over and over again that I am not the person that they should be listening to. I mean, I view myself as a financial entertainer and nothing more. But it's tough. It's tough to say. It's tough to say for over a year that you like something and then to flip and hope that the one person that bought it because of you actually listens when you flip. And I feel badly. I feel a lot of responsibility, even though I don't want it to those people. But I'd rather feel responsibility and feel that way than not give a shit. I think it says more about character to feel that. So I don't know, man. There's pluses and minuses. The benefits have far exceeded the costs, but there are costs to being public.
Yeah, and I like that last point you made. One thing that's been really frustrating for me, kind of now that I've had my newsletter for 7 years, is that I'll recommend a stock and then I'll say, oh, my thesis are wrong or conditions have changed or whatnot, and say that I'm selling, I'm moving on. And then people that are following me hold the stock because they have kind of the get back to cost basis or whatnot. And then they'll be like complaining, like, why does the stock keep going down? It's like, I moved on, I sold. But I feel kind of some responsibility that anyone followed my initial pitch. Because there's a lot of, I guess kind of a sunk cost bias. Once people own a stock, they don't want to sell it until it's made them money.
Yeah. Yeah. I mean, I think, there is, how do I want to say this? I think the easiest thing to point to is like Guy Spear said something in his book where he was like, look, don't listen to a pitch and go out and buy the stock. And, there's obviously the disclaimers and like all that stuff. And at the end of the day, you just can't help some people from doing really dumb stuff with their money. But it doesn't mean I don't feel bad if they do it. And, but I've kind of gotten to the point where it's like, look, that's not on me. You got to do your own work. You got to know why you own something. And, if I disagree or we disagree, like, who cares? It doesn't matter. It's not, I don't know. I think there's a lot of people in this industry that don't risk capital and pitch ideas and have huge followings doing a bunch of bullshit. And I'm glad I'm not them. That's that I will say. You know, there's a lot of charlatans out there.
So you don't wish you were Chamath? Is that what you're saying?
Yeah, well, yes. I'm working on criticizing by category, Ian.
I'm sorry.
No, it's fine. Yeah, those guys rub me the wrong way, man. But you know what's so bothersome to me about that is like he's got that speech where he's like, get the money so that you can change the world and whatever. And like to get the money by so publicly floating pixie dust on Twitter to so many people that followed him, like on businesses that like clearly weren't businesses at valuations that were clearly absurd. And then to like leave, God, that is offensive because he didn't even need it. You know, like I can kind of understand if you need it, but like why? And I guarantee, well, I don't guarantee, I don't know what's going on, but I would assign a high probability that the incremental dollars that he makes from this day forward will do more to mess up his children than help them. And so like, why not do real good with it? I don't know. Maybe my whole way of looking at him's wrong. And I guess someday, should he want to debate it, I might be open to it, but man, ugh. I don't know any positives that would come out of that conversation.
This may come off as a very boomer take, but I'm always suspicious whenever people are trying to tell me that they're doing stuff for some ulterior motive like ESG or this effective altruism. Like all these cryptocurrency companies are like, we're making all this money to save the world. And it's just like, make money for the sake of making money. Where the US is a capitalist country. There's no crime in making money for your shareholders. But anytime these companies are like, oh, we're doing it all to like help poor people in Africa, it's I assume some sort of fraud or something's going on.
Yes. Well, I don't think that's boomer. I think that's smart. Yeah, it was a wild time, and I'm not convinced it's been. I'm not convinced it's done. I mean, I know we were through a bear market, but I don't know. It feels risk on all over again. Maybe I'm incorrect.
Oh, like we were saying before, the U.S. valuations on U.S. companies are not low enough to be particularly exciting, at least from my vantage point. So yeah, I'd agree with you there.
Yeah, I think there's a lot of merit, you know, and now we're seeing pitches again of like, I don't know, it's trading at 37 times, but comps are trading at 45, so it's cheap. It's like, okay, I mean, I guess I get it, but I don't know that I get it. And obviously that's like way too simplistic, but feels like we're back to where we were. Not quite pixie dust back, but close. I really enjoyed this conversation. I don't know if it's because I'm talking more, but I appreciate you having it.
No, I really enjoyed this as well. I was going to say I think the advantage that being in Colombia or being in South America gives me is that I'm not stuck in the same pond as everyone else. And so like every day I'm looking around and my currency's collapsing. The valuations on my local market are depressed. No one wants to invest money here. And so it's very easy for me to just sit on my cash and not kind of put money into something that's a marginal investment in the US. Because I'm looking around and I'm seeing problems in other countries down here, and I'm like, maybe we could have a recession. Things look pretty grim. And yeah, I think people that are just in the US and kind of don't travel, you don't have that same perspective, if you know what I mean.
Yeah. I mean, look, anyone that studied market history knows that the market's going to bottom before the headlines do, right? That's just how markets work. On the other hand, man, this regional banking stuff scares me. Like, I do not like credit problems. And maybe they create run-of-the-mill recessions, and maybe I haven't lived through enough to understand what they're like. But you get a bunch of zombie banks, and feels to me like cost of capital has to go up on the refinance loans, and then you throw commercial real estate problems on top of that. And like, I'm not like taking risk off the table, but I am not super excited to deploy incremental risk onto the table. That is not where my head is at all.
Yeah,
unless it's foreign stocks.
You worked on the banking side, right? I mean, obviously, when people's cost of capital goes way up, it's going to be way harder to get refinancing and new investment and everything done. I don't see this example where the Fed can jack up rates this quickly and we don't have some sort of meaningful economic slowdown. I mean, like I said, macro is not my strong suit, but it feels like a very risky bet to be thinking that we're just going to endure this huge interest rate increase without any sort of side effects.
Yeah, I mean, look, just because I underwrote loans doesn't make me. I'm interviewing somebody from bank or financials here soon, and I need help preparing the questions. I'm not even sure I know the questions to ask, but yeah, I mean, your interest coverage ratios get quite a bit tighter. The leverage, your fixed charge coverage gets tighter. I would assume that some of the corporate spending gets tighter. Like I don't know, man. Just kind of makes me nervous. And by the way, you can get like a pretty reasonable yield in short-term treasuries. Even if it's not real, it's still okay for me. But they're hard questions. Macro's tough. Micro's tough. Everything's tough. If it was easy, everyone would do it.
Yeah. Yeah, and I think the interest rate point is particularly important. Just like, once again, just my surroundings. If I put money in a bank here in Colombia, I get 9% on a short-term CD. In Mexico, the banks are paying 11% with government backstop for 1-year CDs. So it's like, why would any investor in these markets put capital to work in stocks? And so you just have these atrociously high cost of capitals for any company that's trying to operate in these markets. And I don't think people have really appreciated. This is true of a lot of emerging markets, not just Latin America, but it's very difficult to get money in these places now. The dollar is killing everything.
What's interesting about that is that then you get a scenario where I suspect it's harder to justify deploying capital into more capacity. So capacity is sort of like constrained. I could see that being like kind of inflationary in a weird way. Assuming demand stays constant, right? Although that's the assumption that is likely wrong. But I don't know. It's a wild time to be alive, man. It will continue to be. That's the only thing I'm certain of.
Yeah, we've never had a pandemic inflation shock like this before. It's literally uncharted waters. It's fun times to be an investor, but also a little nervous.
Well, oil should theoretically do pretty okay in that environment, right? But to your point, you got the dollar that's kind of, I don't know. It's interesting. It's the best way I know how to say it. I like the idea of foreign. I have liked the idea of foreign. I got to figure out what I'm going to do about it. So I appreciate you stopping by and having your thoughts and sharing your thoughts. And I've enjoyed the conversation.
Likewise, yeah. And I just want to pound the drum again for Mexico, because I think it's much more closely tied to the U.S. than people realize. It's a much more pro-secular growth story. People usually think of emerging markets as just being tied to commodities or inflation or whatnot, but I think Mexico has really turned the corner and is going to be a tremendous story for the next 5 or 10 years. I think Americans are still sleeping on it, even though it's kind of the next door neighbor. Tourism is way up. Mexican travel arrivals are now up 35% from 2020, from pre-COVID. I think you're seeing this flourishing, not just of the Mexican economy, but you're seeing kind of these cultural ties. Like Americans and Mexicans are really starting to appreciate each other's culture. Like we've seen a huge rash of Spanish music that has been very popular in the U.S. Just we're seeing really the integration of Mexico into the broader North American story, and I think investors can make a whole lot of money as that continues.
If people liked what you've said, where can they find you?
Yeah,
where can they sign up for your writing?
Yeah, so I'm on Twitter, Bezek, Bezek, and Ian's Insider Corner on Seeking Alpha on Substack.
All right, cool. And I will make sure to put those in the show notes. And again, thanks, man. This has been fun. I've enjoyed interacting with you on the Twitter machine, and I've enjoyed chatting with you. So
yeah, long time listener.
I hope you have a great day.
Appreciate the opportunity to be on the show. It's been fun.
Yeah, man.